Let's talk about these markets then in 3 minutes. And Mark, we have seen a bit of a boost to the Asian session, and you've mentioned what news flow we've seen from China, and we talked about it in our headlines. How material is this? I mean, 19 measures, $146 billion, or 1 trillion yuan, if you prefer it that way, of stimulus into the Chinese economy. Is that significant?
Look, actually, one of the things that shocked me is I was off the desk a lot of this morning, and I've come back, and people just aren't convinced. And, I kind of asked a few people, like, what do you think? And everyone's like, no, we've kind of seen this before. None of these measures are really working. It's just pushing on a string. And I hear all those messages, but I think this is quite a significant package. And I think the fact that the government is kind of continuing to fight this battle, saying they will support both the growth overall, but also specifically the property sector. They're saying, like, look, we don't want this to be an uncontrolled collapse. And I think that ultimately this might feed through to being perceived as a little bit more positively over the next week or two as people get time to digest. The problem is the moment that it's overshadowed by the European energy crisis and, of course, Jackson Hole. So people aren't going to get too excited by one positive element coming out of Asia alone.
Let me ask you about the gas and gas prices, Mark, and a slightly longer-term context question, I guess, about what the market is pricing in right now, or assuming. I see that natural gas prices are up again. We went above 300 euros yesterday on the European benchmark. We're at 297 right now. UK natural gas, that jumps another 10%, I see, in the GMM just this morning. So we are still seeing this upward pressure on gas prices. And I wonder, it's dropped into conversation a few times over recent days that some people are taking a much more long-term view of how long we see these elevated energy prices. If we're going to see Russian energy shunned for a very long time from here, this isn't necessarily just a one-winter story.
No, look, I think the European continent is in trouble for many years to come. I'm actually quite worried about this. It's getting me quite gloomy. I'm obviously Irish. I want to go back there. And, look, I think it's quite a pessimistic story. And you're the one, Anna, who brought attention to the fact that it was the Belgian Prime Minister who said, the next 5 to 10 winters could be tough. And that was even more long-term than I'm thinking. But certainly, Europe is at the early stages of a deep multi-year economic crisis over the next couple of years. Now, when I say deep, maybe it's not going to be so sudden and severe and sharp over a brief period, but it's not like we're going to suddenly return to wonderful growth in a year or two. There are problems here in Europe which are going to sustain for a long period, and that feeds into the UK as well. So, yes, it is a long-term, very negative story that's not fully priced.
OK, yeah, so just to correct myself, actually, gas prices in Europe are jumping a little this morning, 2.7%, but the UK number up 10% was from yesterday. Today, we don't see such sizable moves here in the UK, just to correct that. Let me ask you about expectations going into Jackson Hole. Another day where we throw this theme around, Mark. I suppose one of the focuses is whether there's any chance of rate cuts next year. I know you've been doubtful about that.
Look, I still think there's very little chance of rate cuts next year. I think that'll be the main development out of here. I do not expect Powell to deliver a hawkish message at the front end. I think people are mistaking those two. He'll push back and pivot, but he'll try not to guide anything for September. But if he does, it'll be more towards 50 basis points, I think.